And so welcome everyone. We really appreciate your attendance on our webinar this morning. My name is Corey Kersley. I'm the Executive Director for the Sherwood Chamber of Commerce. And we are co-hosting this webinar with the City of Sherwood, and Bruce Coleman, who is the city's Economic Development Manager, is our liaison on these education sessions. And we want to thank Banner Bank. We have a few representatives from Banner Bank on with us this morning for sponsoring and helping make this possible. And we also want to thank Metro and a grant that we received from Metro that also allows us to do this and not have to charge any of the participants for joining us. So with that, I think maybe the first thing that we'll do is, just since there's not a lot of us, just briefly go through and do a couple of introductions so that we can kind of get to know who's on the call with us and maybe what you're looking for and what your projects or businesses, so that might help drive some of the presentation today. So with that, Carmen, thank you again for joining us this morning from MESO. Do you want to just do a quick introduction of yourself?
Sure. I'm Carmen Madrid with MESO, Micro Enterprise Services of Oregon, and I'm the Regional Development Business Manager.
Great, thank you. Carmen has joined us before, and we appreciate her attendance. She has a lot of connections to entrepreneurs and small businesses that are looking to grow, so we're happy to have her with us. Let's go next to Riley Kramer. Are you able to unmute and just give a brief introduction, Riley, of who you are and what you're looking for here?
Yeah. Hi, I'm with Meltar Supply out in Oregon, and I run business development for them. I'm just on here. Our boss had wanted me to come take a look, take some notes, and get back to her. So, I mean.
Okay.
Riley, this is Bruce Coleman with the City of Sherwood. I'm Economic Development Manager. What's your main product line?
So we deal with just all construction supplies. Our main markets are airports, roads, bridges, and dams.
Okay, thanks.
And
Yeah.
Riley, are you currently importing or exporting any products that you use for projects?
Currently, no. We're still trying to figure all that out, actually.
Can I ask one more question, Riley?
Yeah.
Do you ever bid on any international projects?
Not yet, but we are in discussion to try and start getting into projects in Mexico and Guam and Hawaii.
Okay.
Excellent. Well, welcome. This is exactly kind of webinar that we're hoping can help folks like you and your business that are looking to explore and grow and into markets you haven't been yet. So we hope this session will be helpful for you.
I just got one more question. So where are you based? Where's your company based?
So our main corporate office is in Oregon. We're in Donald, Oregon, but we have certs in several different states, Colorado, Pennsylvania. We're working on Texas right now. So.
Okay. Thanks.
Excellent. Yeah. Thanks, Riley. Okay, let's go to small flags, and I've got a list of the registrations here, so I'm guessing this is Joyce.
Yes.
You want to give us a brief introduction, Joyce?
Sure. Well, we found out about this by attending the multi-chamber event yesterday, and really appreciated that. So small flags, we are a home-based business in Oregon City. We sell flags and patches around the world. Our major embroiderer right now is in China, and we have a good relationship with them, but also we are looking to keep our options open in case trade with China goes sideways somehow for our products. Some other opportunities that might be available in other countries. So we ship to over 50 countries, and even though we say we're small flags, we do most of our business on our website called Small Patches, smallpatches.com, because little patches can easily be sent in an envelope anywhere in the world. So it doesn't take a package to send it like it does a flag. But we've been specializing in smaller and smaller style patches. A lot of our customers wanted smaller than the regular 2-inch by 3-inch patches, because if they go to a lot of countries, their backpacks don't have enough room. So we found a demand for that product, and we are filling it and doing a small business here out of our home.
Excellent. Well, thank you. I'm glad that you were able to join us this morning. I'm glad we connected yesterday in the multi-chamber event that shared that information. So thank you. Any questions for Joyce before we jump to the next one? Okay, so the next one, your name is shown on the screen as SB. I'm going to guess that's Sophie. Are you able to unmute and introduce yourself? Okay, maybe not, and that's okay. Thank you, everyone, for joining us. So the rest, in addition to Bruce, the rest of our crew here is with Banner Bank. So I'm going to give Shannon Mitchell, who is our liaison with Banner Bank, a chance to introduce everyone, and then we'll get into the presentation. Shannon?
Wonderful. Thank you so much, Corey. So personally, I have 10 years of banking experience. I currently lead Banner Bank's business banking team in Oregon and Southwest Washington. We specialize in solutions tailored to our clients' needs. With myself and our local team, we serve clients by getting to know them and understanding not only the needs and challenges of their business, but really being able to help maximize revenue and and eliminate those struggles and challenges that may be in existence currently, to improve efficiencies while still allowing the business owner to drive revenue. Personally, I have a really big passion for helping businesses and business owners succeed and accomplish their goals and dreams. So thank you again for hosting us today, Corey. With that, Bryce Baker is a business banker on our Portland business banking team. He's a business development officer and has been in banking for just shy of 5 years. He specializes as well in helping business owners find needs and solutions to tailor to their needs and increase revenue. And with that, I'd like to introduce our speaker today. Kristin Kyle-McQuesten is VP of Trade Finance with Banner Bank. She specializes in all international trade finance and is really our expert in that market. So I think that this presentation is going to really add quite a bit of value to those of you on the call who are already importing or exporting, as well as looking at doing those additional transitions into getting into those international markets. So Kristin, take it away.
Okay, great. Thank you. Thank you for joining me. Good morning. So today we're going to talk about some of the international payment options and then payment risk mitigation, because that's why we're all in this business of selling or buying, and payment flow is an important piece of that. This is an extra hot topic these days, with many companies looking into buying or selling COVID-19 related items. I didn't hear that anyone today was really interested in doing that, but that is a very hot topic these days. And we're seeing a lot of requests for PPE, vaccine making machinery with new buyers and sellers. And anytime you introduce new parties into an international transaction, you're going to look for some risk mitigation tools. So that's important and hot at the moment, but really this is an important topic for any of you who are dealing in international trade at any time. So if we take a look at our first slide, our next slide.
Hey, Kristin, can I just interrupt real fast?
Yeah.
Just to let everyone know, because we're such a small group here, I think Kristin would welcome any questions at any time. We don't necessarily have to wait till the end. So if you do have a question, feel free to unmute and pipe in, or we will also monitor the chat. If you'd like to ask your question in the chat, then we can make sure that we get that addressed as well. And then I would also invite everyone who would like to include their contact information in the chat, so that if anyone wants to make a connection afterwards with anyone, they can do that. Okay, that's it. Thank you.
Perfect. I appreciate that. Yeah, this is a lot more fun when it's a conversation style. So thank you for that. So in this first slide, let's take a look at a common sliding scale representation of payment. And so in the top half, you're looking at the exporter's view, and in the bottom half, the importer's view. And when I talk today, I'm often going to default to the exporter's view, as we're typically looking to build exports, and it helps keep us all on the same page. It's also, our geographical region tends to be more export heavy. But at times I'm going to switch into the importer's view, and I'll try to make sure to call that out beforehand so we can all be on the same page when we're talking. Okay, so when we're talking about international trade, it's estimated that about 80% of trade is made on an open account or cash in advance basis. And only about 20% of international payments flow through the trade products. Okay, open account for the exporter is the least attractive option due to the payment risk of shipping your product and then hoping you get payment in return for that once the product arrives at the destination. It can also be a strain on your working capital because you have to have funds to produce those goods prior to the shipment and then get paid after the shipment arrives. Okay. Cash in advance for the exporter is always the most attractive option. If you can get all your money in hand before your shipment goes out, that's definitely a welcome thing, and we're not going to try to tell you that there's a better option than that. And then sometimes you will see a combination of those two payment options for the, a prepayment and then the rest of the payment due upon arrival of goods. And so those account for about 80% of international payments right now. We're going to talk about the other 20% more generally today. And so one of the reasons on the import side, the cash in advance can be risky because I've worked with several clients, especially lately, that have run into problems with sending out prepayments or even full prepayments prior to shipment because of some company bankruptcy issues that are happening these days. So today we're going to talk about the payment instruments that fall in the middle of the scale, which are actually our trade products. And our talk is going to be general. So I'm going to stress that it's really important to personally know your banker and to work with someone you trust through to work through your specific situation. So if you're a Banner Bank client, now you know where to find me. But if you find yourself in a situation where you don't know who to contact at your current bank, feel free to contact myself. My information is on the slides, and I'm happy to talk with you at any time through your specific situation. Okay, so this, again, just an overview of the sliding scale and where the risk lies. And it's really those documentary collections and letters of credit in between that we're going to be focusing on today. So if we take a look at the next slide, the first two products listed, letters of credit and documentary collections, are actually trade payment products. And which payment product you choose is going to be unique to each trading partner you have, that relationship longevity you have with those partners, the country you're dealing with, and your particular cash flow situation. The third point listed, forward contracts, is a profit protection and sales expansion tool. And then the last point listed is credit insurance. And while credit insurance is not offered by banks directly, it is an important risk mitigation tool. And oftentimes banks are going to require it for lending. So we're going to touch on this as well. And then at the end, I'm going to provide you with some helpful trade tips and some resources. Okay, so first let's take a look at commercial letters of credit. And I jotted down some notes as people were introducing themselves. And so, Joyce, I know that you mentioned that you deal a lot with China. And so we tend to see commercial letters of credit most often dealing with China, because there are certain countries that can use letters of credit on an importing side as financing for them. So you will see letters of credit more often in the trade transactions with China. We see it with a lot with any Middle Eastern countries, a lot with India, and some other countries where in those particular countries, they have an incentive to use these products. So I'll just mention that so you're aware that you may hear about commercial letters of credit based on the countries that you're dealing with. So when I talk about commercial letters of credit, sometimes you're going to hear these called documentary letters of credit, or LCs for short. So when we're talking about commercial letters of credit, they can be used in domestic transactions, but most often you're going to use commercial letters of credit for international trade. And a commercial letter of credit is meant to be the payment mechanism for a transaction. So this is the way that you move money from one party to the other party. And these financial obligations are governed by a rule book called the UCP 600, which are rules that all banks in the world that work with letters of credit have agreed to follow. Okay, so what a commercial letter of credit is an issuing bank's promise to pay if certain documentary requirements are met. And the issuing bank is the buyer or the importer's bank. So this takes the buyer out of the payment transaction and inserts the issuing bank into that payment role. And because payment is based upon documents complying with the terms laid out in the letter of credit, it's really important to work through the details of the shipment prior to the LC being issued. And it's always a good idea to review a draft of the letter of credit prior to it being issued to make sure you, as an exporter, can comply with the included terms. And I think it was, somebody mentioned they were on the sales side or business development side, and I think that was you, Riley. I want to call out that when we see problems in letters of credit, it's because we have sales teams going out and making a sale and talking about, oh yeah, we can accept a letter of credit for payment terms, no problem, and not talking to the operations side of the house and understanding documentary requirements. And so it's really important in your own business to make sure your sales team and your operations team are talking when you accept a letter of credit as a payment term to make sure that documentary requirements can be met, because that is the whole purpose of the letter of credit. Have complying documents equals secured payment. Okay. Documents under a commercial letter of credit typically contain a bill of lading, which is issued by a shipping company or a freight forwarder, and it's title to the goods underlying the letter of credit. So when an exporter ships their goods, they gather the documents required in that letter of credit and present them to their bank for review and to be sent to the issuing bank for payment. If documents comply, payment's made. It's as simple as that. It's a bank's requirement to pay. So they're on the hook for that payment if those documents comply. If there's a discrepancy in those documents, and by discrepancy we mean something that does not comply with the terms of that letter of credit, then the buyer has to approve that discrepancy for payment. So oftentimes they may wait for goods to arrive at port, and they need that bill of lading before they waive that discrepancy and go pick up the goods. So in this case, it may delay your payment, but it does not negate it. All right, it just might cause a little bit of a delay, because again, they need those bills of lading to go to the port to pick up their goods. Okay. On the import side, letters of credit can help ensure the buyer has all documents required to clear goods through customs and that goods are shipped in a timely manner. So letters of credit can benefit both exporters and importers. They have different reasons for that benefit, but they can work for both sides. Now, the payment terms under a letter of credit can be termed as at site, and that's the example I just explained, where documents are released to a buyer at the time that the payment is made by the issuing bank. But there's also a payment term called usance, and that's kind of a strange word, usance, and that means that it's payable at a future date. So for example, 90 days after site. And so this allows the buyer time to go pick up the goods, turn those goods into sale prior to remitting payment or paying back the issuing bank when they make payment 90 days down the road. Okay, so this is a really interesting product, and I'm going to try to get a little bit in the weeds, and I'll try to explain it. And if you have any questions, let me know. But if the seller still wants payment at the time documents are accepted and released, so if they want more quick payment, and the buyer needs time to sell those goods before they can pay back that issuing bank, so they have time to turn the goods, there can be an arrangement made where payment is made to the seller site but not collected from the buyer until 90 days after site. And this is an excellent option for both parties, and it's termed as discounting. Okay, and this can be a really attractive sales tool if you're in the business development side. This is really attractive sales tool because you as an exporter are being paid quickly. If you have complying documents, once those documents reach the issuing bank, you're paid within 5 banking days. So you're being paid quickly as an exporter, but the importer is going to have access to United States bank interest rates. So they're basically getting a short-term loan in that discounting process at United States bank rates. Okay, so just to give you an idea, a commercial letter of credit discounted draft, we term it as draft discounting, may run in the 4 to 5% range. So it may cost you 4 to 5% to discount a draft. And your rate depends on a few things, like, you know, how long of that tenor it is and what countries you're working with and what bank you're working with. But a buyer's rate to borrow in a foreign country, a lot of the countries that we're often talking about, can be in the 14 to 19% range. So you're basically giving that buyer in a foreign country a short-term loan at 4 to 5%. So, and you're getting paid quickly. So there's a benefit to having that letter of credit in allowing that time draft or usance draft and then discounting it. So it's really important when you get more into this, a little bit more complex type of transaction where banks are discounting drafts, that you work with your bank beforehand to make sure that they have the ability to take on that discounting option, because really what they're doing as a bank, they're taking on some foreign bank risk, and you have to make sure that they have the ability and room on their lines with other banks to do that. But you know, talk to your bankers, because that's a really good sales tool to use.
Hi, Kristin.
Now,
I have a question.
yeah.
This is Carmen. You're explaining a lot of new terms I'm not familiar with, which is probably why I'm here. But can you give sort of an example, you know, like an import-export example of a purchase, and then how that transaction actually works with the percentage rates that you just mentioned?
Okay, sure. So I'm going to give you an example of a client of mine that exports hay to China. And so they have a $100,000 letter of credit in their favor issued from a bank in China. Okay, they're buyers in China. And so if they have an at-site letter of credit, they receive that letter of credit. They have the terms laid out in that letter of credit, meaning they have who the parties involved in that transaction are. They have the date that they have to ship that hay to China by. They have the documents they have to present under that letter of credit. At least you're going to have a commercial invoice, a packing list, and a bill of lading. You might have to include, in their case, they have some agricultural documents they have to supply as well, like phyto certs and things like that. But whatever you need in those documents required. And then you have certain other, you know, if there's any other requirements, they'll lay that out in the letter of credit. So our client here gets their hay together, they put it in a container, and they ship it off to China using a freight forwarder to book that shipment, and they send that off to China. So they then get their bill of lading together, their commercial invoice, and their packing list, anything else that might be required, and they submit those documents to me as their bank to review. I say, okay, everything looks great. We're going to send it on to the issuing bank for payment. Or if I notice something saying, oh, you know, you have that, you know, your bill of lading says goods shipped on 9/5, but your commercial invoices is saying goods shipped on 9/6, make that change. So everything complies, and then we ship it off to, we send, as our clients say, we send those documents over to China, to that issuing bank. And because those documents comply, China has 5 banking days in China to remit payment to through us, and then we, of course, credit our client. Okay, so that's an at-site payment. Let's take that same $100,000 letter of credit, and we put that in with a USANCE draft. And USANCE is USANCE. Sometimes those are called also time drafts. And you can see, oftentimes you'll see 30, 60, 90 days, either after site or after BL date, so after the shipment date. Okay, it can be written multiple ways. But let's say we have a $100,000 letter of credit arrive with payment terms 90 days after site. So again, our clients shipping hay, they go through that same process of getting their shipment together, using their freight forwarder, getting it on a boat, getting their documents together. And then we send off, or we examine those documents. If they comply, we again send them off to the issuing bank in China. They are then going to say, okay, documents comply with the terms of the letter of credit. We promise to pay you 90 days from today. And it's the issuing bank in China promising to pay 90 days from today, not the buyer. So that's important to note. When that promise to pay from an issuing bank comes in, then the United States Bank, we would then pay our client, okay? Pay our client the $100,000. Then when the 90 days in the future comes, we take the $100,000 plus 4.5%, gets paid back to us from that issuing bank. So that's where the discount charge comes in and the discounting comes in. So you're paid immediately once that promise to pay in 90 days comes in from the issuing bank, and then that draft amount of $100,000 plus the discount charge would come in from China 90 days down the road. Does that clear things up a little bit?
Kind of.
So,
I'm still understanding and learning, just because of you know, I'm just thinking of this letter of credit essentially is a safeguard for the consumer here at the end of the day, right?
yeah, yes, you're moving risk from a buyer to a bank.
Mm-hmm.
Now, there's
Right.
even a product where you can move the risk from the foreign bank to a United States bank risk, and that's called confirmation. But I wasn't going to jump into that because that's really getting deep into the weeds. But know that there is that option where if you're concerned even more about a certain country or a certain bank within a country, you can move risk from that country to the United States.
Okay.
To a bank.
I think the biggest thing that we face is that we have small businesses that are entering into manufacturing, and they manufacture in China or any other country for that matter. And what ends up happening is that the first time their order comes in, it's beautiful. And then they're ready to put in a large batch order, and 50% of the goods and services they receive are deficient. And next thing you know, they're calling a 1-800 number, and there's no such company. This has happened over and over again. And so just kind of learning how to, you know, secure that risk for our small businesses. I mean, you know, $10,000 is a lot for small businesses.
It is a lot. So if you use a letter of credit, you can require a third-party inspection certificate in that letter of credit, and you can have a third-party inspector, SGS or any other, you know, international inspection third-party company can go in and take a random sample of those goods, and it either, you know, say they meet certain specifications or they don't. And so in a letter of credit, not only would you require that third-party inspection, but you require that third-party inspection showing it has met the required specifications and exceeds, you know, met or exceeds. Because if you get one that says it fails, if you don't call that out, then a failing certificate complies. So you can have those types of goods examined before. And it is hard to do every time. I know that cost mounts quickly, but it's better than having a shipment that you can't use as well. If you're going to be dealing with other countries, that's a good option. Now, I'm going to jump in. I'm going to jump a little bit ahead. At the end, I'll talk a little bit about some programs that are offered by the SBA and Exim Bank in the International Trade Office that help vet foreign companies. And so that might be something for your customers to look into too, is some programs to help vet other, you know, foreign parties. Does that help a little bit?
Yes, thank you.
Okay.
And Kristin, we do have a question in the chat. How do you confirm that the overseas bank is solid?
So that's a really good question, because the letter of credit, then if you're moving risk from a buyer to a bank, you know, it's only as good as the bank is. Number one, talk to your banker and know it, or ask if they have any information on foreign banks, and if they are willing to discount or confirm letters of credit from that bank. Because if your bank is willing to take on that foreign bank risk, then you should know that they've done some vetting on that bank and they feel comfortable taking on a financial risk from that bank. If they say, oh no, we won't discount from them or confirm from them, then you know that there should be a little bit of a red flag on okay, why? There could still be possibilities that lines for that specific bank or specific region are full, but it will beg you to ask some other questions. Well, most foreign banks that have international services are going to be on the larger side, and anytime you're dealing with some of the larger, more known banks, again, we're all playing by the same rule book, and they'd have to go out of, they'd have to go through bankruptcy pretty quickly and quietly for them to be out of this payment risk. So if it's truly a worry, if you're truly worried about a country or a bank that you're working with, then you get it confirmed by a United States bank. And so I'm working with another client right now that shipping to a country in North Africa with a bank, in a country that is not super stable. So that letter of credit's being confirmed through a bank here in the United States. And so it's that United States bank that's taking on that Northern African bank risk. And then you as the client are taking on the United States bank risk.
Perfect.
So,
thank you. And then
that's a good option.
I do have another follow-up question from myself. So just to make sure that I'm understanding. So what happens in the event that the buyer, like the actual buyer themselves in China, let's say, what happens if they do not pay their bank back? Because from what it sounds like, the bank has already paid the United States bank, who then pays, me if I'm the client reporting. So if your Hey client, for instance, if their buyer in China doesn't pay, then what is the process within that? And is there any chance that will come back on the client who's doing the exporting, as well as future, can the bank essentially tell the exporter that they can no longer work with that client anymore as a result of the loss?
Okay, good question. So when you deal in letters of credit, part of the beauty of a letter of credit is that it's an independent obligation of a bank. It's an independent undertaking. So truly, as far as we international bankers are concerned, the applicant who's the issuing bank's client is truly no longer a party to the letter of credit. So if the letter of credit is paid out to the beneficiary, it's the exporter, and payment is made, and then the applicant cannot repay the bank, that's a whole separate transaction from the letter of credit and the payment to the beneficiary under the letter of credit. Then that bank in China is going to deal with their client however they have that set up to deal with in their bank process and their client process. It doesn't involve the exporter at all. So that kind of leads into my next part on commercial letters of credit. And while I can't speak to other banks' policies, I can tell you that if you're an importer or the buyer and your bank is issuing the letter of credit on your behalf, so for example, at Banner Bank, if I have a client that's importing and I'm issuing the letter of credit, my client has to have a credit line with the bank. So I can hold that credit line and then recoup by advancing under that credit line if I don't get paid back as a bank after I've made my payment out. Okay, so again, they are separate, but banks typically, when they issue a letter of credit, they're going to require some sort of collateral, whether that's cash, credit line, however they work that out with their specific client. Okay, if you're an exporter receiving the letter of credit, typically you're not going to need a credit line, only a relationship with the bank, because most banks will not allow trade products for non-clients. So you just have to have some sort of DDA or checking account at a bank if you're an exporter typically, okay? And there's also going to be very specific instructions to have the letter of credit routed correctly to your bank. So again, work closely with your banker to make sure that that letter of credit is routed correctly and gets to you, because that's, you know, we see a lot of problems with that. Okay, so any other questions on commercial letters of credit where they're meant to be a payment mechanism before I jump out?
So if I could ask, like Carmen, a lot of this is very new to me. And so, but as you're talking that in my head, I'm picturing these are processes that take place for business to business transactions that are tens of thousands of dollars. Is this something that, like, a small business that's, you know, sells designer socks, for example, it's not necessarily business to consumer, right? This is just, you know, bigger transactions to protect yourself. Is that accurate?
Okay.
Yes,
partially.
Oh, I was just going to say yes. For small businesses, that is a lot of the transactions that happen when they're having their products made elsewhere to lower cost. So these are international transactions that are occurring. But, you know, quite honestly, even before that happens, we tell people you need to have some strong established connections in those countries. And that's really, or another partner that you can be working with. So, you know, it's just so much easier. So
I had a question. I've been told, and I had to walk away because I had a phone call, so you may have already mentioned this. I've heard that the U.S. Commercial Service at U.S. embassies or consulates will go out and see if those businesses are real. I don't know if that's true or not, and if that's something that's done at no cost versus having a private firm do it.
There are programs through the U.S. Commercial Service and through the SBA that where they offer vetting of foreign companies, and there's even some matchmaking services, and they would even attend appointments with you.
Right.
You know, obviously, the more involved they get, there would be a cost. I can't quote exactly. They have a couple different programs, but they are available. Absolutely. Yeah.
Yeah, they've been very helpful to companies that I've worked with that were doing exporting, you know, when I worked elsewhere. So I just thought I'd mention that and see what your thoughts were.
Well, and I think it's a great idea, especially these days in dealing with China and any PPE. We're seeing a lot of fraud. So it's definitely worth having some help vetting companies.
Thank you.
And to go back to the question of size, it doesn't have, I mean, economically, it makes sense. The larger transaction, the less of a percentage than any fees might be, because you are going to run into minimums for letters of credit, and there is a cost involved. But I've had clients that have used letters of credit for $2,500 just because they wanted to have comfort having banks involved in a transaction. And then once a few transactions go smoothly, then they'd open it up maybe to some other different products. So, you know, it can be millions of dollars and it can be just a few $1,000s. It runs the range, but it is business to business. It's not going to be you're not going to have personal names involved typically in commercial letters of credit. Okay.
Okay, thank you.
Yeah, you bet. Let's go ahead and take the next slide, because we're still talking about letters of credit, but a different type of letter of credit. And Riley, this is Riley Salon. This is where I might see some of the like bidding of projects. Standby letters of credit can be helpful for those, as well as in construction. So I think, was it Bryce? It was Bryce, right? That was on construction, maybe some construction loans. So standby letters of credit, again, the other letters of credit were called commercial. standby letters of credit are typically domestic in nature, but can be international as well. And we liken standbys to insurance policies where they're standing by in case something goes wrong, meaning these standby letters of credit are issued by an issuing bank, and if everything is handled according to the agreement between the two parties involved, termed the applicant and the beneficiary, then the standby letter of credit is never drawn again and paid out. However, if the applicant defaults on the agreement, then the beneficiary, who's receiving the benefit of that standby letter of credit, can draw against the standby for payment from the issuing bank. Okay. Again, a standby letter of credit is an issuing bank's obligation to pay and not the applicant, who is the issuing bank's client. Okay, so the parties involved here, again, just to make sure, to make the terms clear. An issuing bank is the bank who's taking on that responsibility of payment under the standby letter of credit. The applicant would be my client, the issuing bank's client, and the beneficiary is who's benefiting from that financial obligation. Okay. Standbys can be structured to be as simple as a demand for payment, or they can have certain requirements to be met to trigger a demand for payment. Okay, they can run the gamut of you just have to present something saying, you know, I am owed payment, or then there could be some documents included that show that default. Okay, if you're working with a domestic standby, that standby letter of credit is going to be sent directly to the beneficiary on letterhead by the issuing bank. Okay, so you're going to get a FedEx envelope, open it up, and have an original standby letter of credit. And it's very important that if you are the company receiving that standby letter of credit in your favor, meaning you can claim payment under it, that you keep that original in a safe location. Okay, do not lose that standby letter of credit, as it's likely required, that original will be required to claim for payment. All right, and if you lose it, an issuing bank has no obligation to reissue the original standby. Okay, a lot of them will, but they have no obligation to do it. So keep that original standby in a safe location. If the standby is international, the issuing bank is going to send a SWIFT standby format, meaning SWIFT is a message communication system that allows banks to communicate throughout the world. And so they would send that standby via the SWIFT to another bank in a foreign country, and then they let their customer know that that standby has been received in their favor. Okay, sometimes on the international transactions, you're going to hear the word guarantee, and guarantees are more common outside of the United States. So we basically substitute standby letters of credit in lieu of guarantees. All right. Now, if you're ever bidding on projects internationally, we issue a lot of standby letters of credit to support bids, to show that you have the financial wherewithal to follow through on your bid. Then we would issue oftentimes standby letters of credit to support the duration of your project. And then oftentimes that moves into a warranty standby letter of credit. So for example, Riley, I'm picking, you mentioned that you work with airports, roads, bridges, dams. I'm going to pick a dam because we had a client who engineers and works on dams in Turkey. And so they would go from a bid standby letter of credit for that project on the dam in Turkey to a project like to support the duration of the project standby letter of credit. then onto a warranty for about 18 months to support their work after they had completed it on that dam. So you might run into those when you're starting to work internationally on any projects that you have to bid out. You might run into needing a standby letter of credit or a guarantee. Again, they might be termed as guarantees when you hear that in foreign countries. Okay. Other ways I'm seeing standby letters of credit being issued right now, we see a lot to secure down payments. And so for a shipment, so for example, a client of mine was exporting a certain type of equipment and was requesting a 30% down payment. Okay. The buyer was then asking for a standby letter of credit in their favor for that same amount of the down payment in case our client could not fulfill their purchase order. So if the purchase order was not fulfilled, the buyer then could recoup their down payment by claiming under the standby letter of credit. This buyer had recently had a situation where they had provided a down payment to a company in Canada, and almost overnight, the company in Canada went out of business and they lost their down payment. So that's why they just had a rule in their business now that if they provided a down payment to anybody, that they were going to receive a standby letter of credit in their favor to support the fulfillment of that down payment. Okay. I also see a lot of standby letters of credit issued these days to support lease obligations and insurance premiums. Property owners and insurance companies want security that their rent or their insurance premiums are going to be paid. And so standby letters of credit can be used in those types of businesses as well. We see them a lot.
So are you saying, sorry, I have a question, Shannon. So are you saying for that down payment, if that other company closed, the bank would take the risk and pay back the purchaser or the buyer their down payment?
Yes. So so if I have a client and they receive a down payment, in my particular case, this was $1 million shipment. They had received a $300,000 down payment, and the company who provided that down payment received a $300,000 standby letter of credit in their favor. Now, remember, my obligation as an issuing bank is separate from my client. So if my client had not fulfilled their purchase order as required, that other company can claim $300,000 back under that standby letter of credit. And I, as the bank, have to pay. And then I, as the bank, have to worry about how I'm going to recoup that from my client.
I see. Okay.
Does that make sense? I know it's a lot of moving parts.
Okay. It's just the other instance with the down payment. So if that person, let's say in the US, and the Canada situation that you just mentioned, and Canada folded, the US side had a letter of credit for that down payment, right? To secure their down payment with the bank. And so, I mean, they're putting that in there. And so if that business in Canada folded, the bank would pay the down payment to that person that took that risk?
Yeah, who put out the down payment, yes. Who was the beneficiary of the letter of credit, yes.
Okay, thank you.
So we do see, we're seeing an increase in the request of standby support down payments just because when economic environments deteriorate, we tend to see an increase in letter of credit usage, both commercial and standby. For that reason, is they're looking for somebody to take on more of the risk. Okay. And you can also use standbys to support international trade. So for example, if you don't want to use commercial letters of credit, if you do not want to have to be bothered with getting all your documents put together every time you want to get paid, you can use the standby letter of credit. So for example, if you're shipping to a buyer regularly and you're invoicing, but not completely comfortable with the full dollar amount outstanding at any one time, you can offset some of that risk by having a standby letter of credit issued in your favor, so you can draw against it if your buyer falls behind on the invoice payments. So let's say you have $100,000 worth of outstanding invoices on average at any given time, and you're willing to take, say, 50% of that risk. You would require a standby letter of credit in your favor for $50,000 to secure non-payments or potential slow payments down the road. Okay. So you have a standby letter of credit that's sitting there for $50,000, and then if your buyer gets slow to pay, you start to say, okay, well, maybe I should think about recouping these payments under the standby letter of credit instead of the outstanding invoices. Okay, and of course that can be worked in any type of percentage. You know, if you're willing to take, 80% of the risk, then you have $20,000 letter of credit, or, does that make sense? So again, I'm going to jump into kind of bank requirements for these types of products. Again, standby letters of credit have rules that all banks who work with them throughout the world have agreed to follow. The specific standby rule set is called the ISP 98. It's the International Standby Practice that was drafted in 1998. However, occasionally you're going to see standbys issued subject to the UCP 600, which were the commercial letter of credit rules. That's okay, that still works, it's just not as specific. And then typically, if your bank is taking on financial obligations and issuing a standby letter of credit on your behalf, they're typically going to require collateral from you, often in the form of a line of credit. And however that line is secured, inventory, cash, however that's worked out. Okay. Let's go ahead and take a look at documentary collections. So documentary collections, we kind of laugh sometimes and call these letters of credit light, but documentary collections do not have a bank guarantee of payment against compliant documents like letters of credit do, but they do offer protection by using the bank in a safekeeping role. And then banks lend legitimacy to a transaction. So it's still a buyer's obligation to remit payment under documentary collections. You're only using banks to hold documents per the payment terms outlined in the collection cover letter that goes with the document. Okay, so there's two main payment terms for documentary collections. There's documents against payment and documents against acceptance. If you have documents against payment terms, documents cannot be released to the buyer until they remit payment for those documents. So if you have a full set of bills of lading, remember that's the title document to the goods contained in the collection documents, the buyer has to make payment under that collection before they can have the BL to go down to the port and recover the goods. Okay. With documents against acceptance payment terms, documents are released to the buyer against the buyer's promise to pay at a future date. So again, you're kind of looking at that time draft, but this time you do not have a bank's guarantee for payment. It's the buyer's promise to pay at a future date. So if that future date comes and the buyer chooses not to pay, there's not much a bank can do to enforce that payment. And so, and they already have the documents in hand and already probably have the goods also. So I do not recommend using documents against acceptance on a collection basis when you're exporting goods. Okay, so I'm going to say that one more time. If you're an exporter and you choose to use documentary collections instead of letters of credit, do not use documents against acceptance, because you're really not guaranteeing your payment in any way, and you're going to pay a fee for it. So no reason to do that. So banks have centralized departments that handle collection documents. So it's really important, again, I'm going to stress this over and over again, it's really important to work with your bank. You need to find the correct area within the bank to either send out your documents on a collection basis if you're a seller, or where to have documents sent if you're the buyer. So if you are a buyer, do not, and I repeat, do not have documents sent to your local branch. In 99% of the time, it's not the right location that handles those products, and you're going to delay the release of the documents to you because they're going to have to route through the bank to get to the correct department, okay? And a lot of times you might have goods sitting there having demurrage charges because they're sitting at court and you're waiting to get the document, okay? Banks also have a rule book for documentary collections called the URC 522. So again, we're all playing by the same rule book throughout the world with documentary collections. Any questions on collections before I jump off of those? Okay, let's take a quick look at foreign exchange forward contracts. And so forward contracts for foreign exchange lock in a rate for a foreign currency transaction, so you either know how many US dollars you'll be receiving or sending at a future date. And this can help you with cash flow planning and profit protection. And the option of selling or buying in a foreign currency can also give you an advantage over other companies, because one party in an international transaction is taking on foreign currency risk. Okay, most international transactions are made in US dollars, so it's the other party that's taking on that foreign exchange risk. However, if you're willing to bear the foreign exchange risk, you might be opening up some sales opportunities. And it might be that where you provide one price in US dollars and another price in, let's use euros for an example. So if they choose to pay the euro pricing, you can lock in a euro exchange rate for a future payment date so you know how many US dollars you're going to receive. All right, so for an example, if your buyer has agreed to pay you 500,000 euros for a shipment, and the euro is valued at 85 cents at the, per dollar at the time of the sale, you'd expect to receive $425,000. If the euro later decreased to 84 cents instead of 85, payment under the new rate would only be $420,000, meaning a $5,000 loss to you. So if the euro would have increased in value, you of course would have received extra profit, but most exporters prefer not to speculate on foreign exchange fluctuations, and they prefer to avoid the risk and just have that known profit locked in. So that's where you can help lock in profit and know know what you're either going to be paying or receiving, depending on which side of the transaction you're on, and open up potential other markets by offering this option. Okay, there's a couple different types of FX contracts depending on your need. You have window forwards, or sometimes called open forwards, where you have a short period of time, like let's say a week, where you can either send or receive money under that contract, or you can have a fixed forward, sometimes called a closed forward, where they're settled on specific dates. If you have an open or a window forward, you're going to pay a little bit more of a premium to have that flexibility versus a fixed forward, but it's really not that different. So it's nice to have those options. And I also want to be clear that forward contracts are for more sophisticated clients. They have specific requirements that the company has to meet before you can enter into a forward contract. So you're going to need to work with your bank to even confirm if you have this option to work with forward contracts, because company requirements are regulated to work with this product. So that's a really quick overview of forward contracts and how they might be able to work for you. Does anybody have any questions before we jump off of those? Okay. Let's take a look at credit insurance now. So credit insurance can be used in conjunction with the trade products we've talked about. so with letters of credit or documentary collections, or in lieu of those trade products. And it's available through insurance brokers, not through banks. It's available through insurance brokers, private companies, and the Export-Import Bank. Okay, and it assists in mitigating non-payment risk by a foreign buyer. Okay, brokers offer either private insurance or Exim Bank options, whereas private insurance companies sell their own specific product. So if you think that you are interested in an Exim Bank insurance product, you're going to have to go through an insurance broker. Okay, you can't go to Exim Bank directly. They'll refer you off to some brokers. Export credit insurance generally covers commercial risks like insolvency of the buyer, bankruptcy, slow payment, and then certain political risks like war, terrorism, riots, or revolution that can result in non-payment to you. It also covers currency inconvertibility, meaning if at a time when you made a sale, someone could get money out of the country, but then regulations changed and they can't, it covers that. And it also helps cover import or export regulation changes, all right? So it's important to note that this is credit insurance and not product insurance. They're different, okay? It does not, credit insurance, export credit insurance does not cover physical loss of your product or damage of the goods shipped. That's gonna pretty much fall under your marine or other types of insurance. And it does not cover contract disputes. So if you get a shipment of red socks versus blue socks, it's not gonna help solve that problem, all right? This is just export credit insurance for non-payment. And then the policies can be tailored to cover one buyer or multiple buyers, or, you know, they can set it up anyway, depending on your specific need. And then credit insurance can also help cash flow. So this is an important working capital tool because it can help, if you have export credit insurance, it can help increase lending limits on your foreign receivables, all right? Some banks may lend even up to 80% on foreign receivables if you have credit insurance. So that's a really important point about, you know, the product and how it can help your cash flow. Any questions there before I jump off of this? Okay, that's funny. Usually I have more questions about credit insurance than anything else. So, okay, what kind of as we talked about, what we talked about today, there's a lot involved in letters of credit and different products involved in risk mitigation. So there's still a lot of variations on these products as well as some other products out there. And this is my favorite guide to help explain trade finance. It's available online and it gives you detailed but still brief explanations of trade payment options and when to use them. All right, so take note of this website and this guide. I'm not sure if any of you have used it in the past, but I hand it out to people. I make copies and actually hand it out to people. I find it that useful. Okay, here's some websites. These can help get you started with some trade information and loan programs potentially. There's even loan programs out there for foreign buyers of your product. So that's something to be knowledgeable about as well. So these sites offer helpful information for exporters, such as what you should consider when you're deciding to work with a new foreign trade partner, options available to help vet country risk and company risk, services available to assist in background checks for foreign companies, and they even make matchmaking services and appointments. So there's a lot of information out there. You just need to do some digging and not be shy about asking questions. Let me know if you can't find what you're looking for. I can help you find it. I know these sites pretty well. And there's also Exim Bank, Export-Import Bank representatives, and SBA trade representatives for your area in Portland. So actually, I take that back. I think the SBA person isn't actually physically located in Portland. I think the Export-Import Bank representative may be located in California, but he still covers the Oregon area. So, so there are resources available to you to help let you know what programs are out there, both government offered as well as product offered. On the next slide, this again just talks a little bit about what we talked about before, that it's really businesses of all sizes that have need for our tools. They're not just for large, complex corporations. You just find a trusted partner to help you through this process. You're not expected to know everything right off the bat. That's what we do. That's why it's taken me so long to, you know, why I've been in my position for in international banking for so long, is that it's a specialty field and you're not expected to know all about it. So work with your trusted partners to help you through the process if you have questions. And then at that point, just thank you. I'm sorry we went a little long, but I appreciate the questions and the interaction. I think that makes it so much more helpful when we can tailor situations and examples to fit you exactly.
I've got a question.
Really valuable.
Oh, sorry.
Oh, go ahead. Go ahead.
I've got a question. So, you know, with all of these trade wars going on and tariff issues, what are you seeing in terms of some of the trends? I mean, the Portland regional economy is very strongly, I don't know if it's dependent, but very strongly export focused. And I'm just wondering, if you're seeing some trends, good or bad, that seem to be happening in terms of exports from this region?
Well, you know, that's a really good question. And this is something that, you know, a lot of industries, you know, were affected by COVID. But our industry has been affected by, as you termed, trade wars for a couple of years now. And so this is something that we have been dealing with and addressing for years. And so really it's not, I can't say that anything's new, because it's been 2.5 years now, I think, that we've really been feeling this. We have definitely seen a decrease in exports, and I'm speaking with our Pacific Northwest region. We've definitely seen a decrease in exports. What we did see them fall off for about a 6-month period in a significant amount. However, what we did find is that our clients are resilient, and they just opened up, not just opened up, but they were able to open up new markets. So, for example, we had a lot going to South Korea and China, and that moved into markets into the UAE and India and Turkey and you know, some other regions. So we saw then sales kind of fall off for about 6 months and then pull back up, just maybe going to different regions. We also see some when our clients are more willing to make some concessions on payment terms. So we see a lot more discounting usage. And how we talked about the discounting of drafts, where they can offer payment terms to the foreign parties at U.S. bank interest rates. That's become much more popular and helped keep the trade going. So, you know, it fell off for a while because of the trade wars and the tariffs. But now with the economic deterioration of COVID, we actually kind of see a little bit more of an increase in the product usage, because people are willing to have to pay for more secure payment options. Did that answer everything? Anybody else have a question?
So I'll follow up my previous question before, and you reiterated that this is really, most of what you covered today was business to business kind of transactions. At what point would a small business that's maybe just business to consumer transactions, I can think of a couple companies here in Sherwood, Mud Puddle's independent toy store. If they start suddenly getting transactions from France or Puerto Rico, or not Puerto Rico, but Colombia or Brazil, or any foreign country, or we have, I mentioned the designer socks. We have a company that does designer socks. They manufacture everything here and then they ship everywhere. And I imagine they're probably shipping internationally. But at what point in a business to consumer environment do they need to start talking to a banker and going through maybe some of this stuff, if it ever reaches that point?
So you mean like they're shipping, they have a website and you or I just log on and we order $40 worth of socks?
Right, yeah, something like that. Yeah.
Okay, so that part of the transaction is not necessarily where any of the payment obligations would come in. That's where they're probably working on credit card purchases, and then they have the credit card protections there. There is a program out there. I can't say I'm well versed in it, but I know there is a program out there from the, I think it's the SBA department. They can actually even do credit card verifications for international credit card transactions. So, I mean, if you're going internationally with a credit card, there are programs out there, but you'd have to have a big enough transaction to make that worth it. Where I think you come in with those types of situations is, okay, where are they getting their supplies to make the socks from? That's where you fall into working with your banker, and more the working capital piece and more the payment process piece.
Right.
Is the supplies to make the socks before they go on to the consumer.
Right, okay.
Or alternatively, Corey, would be if you're exporting your socks to another retail company in France. That would be, it's not, even though it's more of a B2C product type, your client as the exporter is technically another business.
Okay.
Absolutely, yeah.
Gotcha, okay, thank you.
Kristin, I was just wondering, trade finance is a unique segment of banking, what your journey was to get into trade finance, and what did you do leading up to that?
Well, this has been kind of my goal since I was a teenager. I went to school, my degree is in international economics. I always wanted to work. I had always hoped to work overseas at some point in my career. So I fell into international banking. I worked for a Japanese bank in Seattle right out of college until the Asian economic crisis hit in the mid-90s, and learned all about that, overinflation of loan values. And then I went in and worked for another bank in, actually before that I worked for a freight forwarder for a while in Seattle, and then worked for another trade bank in Seattle. Before changing specialty banking just a little bit, I worked in treasury management. And then as soon as I was able to jump back into trade finance, I did. So it's always, trade and different cultures and the way that different countries do things has always been an interest of mine. So much so that I took a year sabbatical, and just recently, and my family and I, backpacked Europe for a year kind of thing. It's an interest of mine that's always stayed with me. Yeah.
Awesome. That's cool.
Yeah. Just to touch on your construction a little bit, we see a lot of, just to let you know, we see a lot of standby letters of credit for performance of like making sure landscaping or sidewalks or any type of product that's county regulated or city regulated or anything happens. We issue a lot of standby letters of credit out to cities and counties, highway districts, things like that, for construction purposes.
Okay, cool. Good to know.
Okay, do we have any other questions? Riley, Joyce, anything come up that you want to clarify while we got an expert on the line? Otherwise, as I mentioned in the chat, we will make the recording of this session available as soon as we get that processed, as well as the slide deck. Kristin has provided that for us, so we'll make that available as well. And so unless anyone has any other questions or comments, I think we'll go ahead and end the session. Thank you so much, Kristin, for the presentation today. Thank you again to all of Banner Bank for your support and sponsorship of this, and to Metro for allowing us to do this. And we really appreciate it.
Thank you. Appreciate your guys' time.
Thank you, guys.
Great. Thank you so much.
Thank you.